Okay, hello. We're gonna do another video, and this is going to be a follow-up of a video we did maybe tagal na, no? A month and a half ago. And again, I'm with my good friend, Mr. Jun Tarrobago, the head of equities of ATRAM, one of my favorite fund houses today. So Jun, welcome back. It's been quite some time since we had this discussion. Dami na nangyari. How are you guys?
Coping very well, Randall. Different ways of doing things. I think some of my colleagues went back to the office today. So, but we're as for me and my team, we're happy to work from home. I think we're able to get a lot of things done from home. So, yeah, staying home for now. Hope you're well.
We're surviving. So, Jun, my question is, from the last time nag-usap tayo, we had that nice discussion, a lot of valid points that you were raised up. A lot of those things actually did happen, those discussions that we had. But now we've seen that the economy has gone down, negative 0.2%. We already know that Q2 is going to happen. We're now in an extended lockdown from the original lockdown to an extended lockdown to MECQ, and coming up with new names about doing. How has it changed your strategies, knowing that pumapasok na yung mga nangyari tayo? Are you still sticking to your own original strategies, or are you revising as you move forward?
Yes, we're sticking to the strategy, but we're doing some tweaks here and there because a lot of information is coming forward, and we're getting more clarity on the fate of the economy, on the future, the present and the future for certain sectors, and all of that is currently being processed by us. And given the fact that it's I think still very difficult to understand and predict what happens and when things happen in terms of the economy, sectors, and stocks, we deem it prudent to think in terms of scenarios.
Okay.
And when we talk about scenarios, we are talking about more in terms of the shape of the economic scenarios.
And that's what we're going to talk to you about. I mean, I went through your material, so there's scenarios. Una, it's futile to start predicting all of these things because, as you said, one can be the information is revealed. But so far, meron bang, is there any information or experience that na-surprise pa tayo, or we were expecting all of these things? We were expecting the economy to go down, we're expecting earnings to go down, and they did happen. Were you still surprised, or you knew it was coming?
Well, what we were a bit surprised about at the start was the magnitude of the quarantine and the broad limitations on human movement, on consumer spending, and on trade. So I think at the start of the year, no one really was able to predict the lockdown for one, and then to the extent. So now, given the fluidity, you're probably sick and tired of hearing that term. Things are very fluid because things are unprecedented. Yes, things are unprecedented in terms of the health scare, but not in terms of market movement. I mean, like I mentioned in our past conversation, there are commonality. There are every crisis is unique, but every crisis has commonalities. And if we think about how markets react to negative negative events, the sequence is actually precedented, or is not unprecedented. There is a negative event causing selling, and then causing indiscriminate selling, then causing panic selling, and then when you reach peak panic, the market usually stabilizes and then eventually rebounds, assuming the economy is not broken. So in this particular case, we still do not think, based on the data, that still do not think the economy is broken, but it's still very difficult to predict what's going to happen and when things happen. So we think in terms of scenarios. So I think you have a chart that
Yes.
shows the,
Okay.
different scenarios. So the name of the we've named the scenario. The scenarios are in letters. So
Okay.
on the rightmost part of the slide, the L-shaped scenario basically is assumes more than a 4-month total lockdown.
Okay. So
And
Jun, we're gonna show scenarios. Basically, you prepare 3 scenarios that's gonna happen. I like what you're saying that it's futile to do all of this prediction, but we can use from experiences and what's happened, and then siguro it's nice to see all of these scenarios and how we can adapt to it and strategize. And these are the 3 scenarios I'm showing in the screen right now. If you can see it, this is the first slide that you have sent me. This is the scenario, and you're talking about there's 3 kinds of scenario, no? The V, the L, and the U. So
yes,
yeah, hindi lang isa kasi narinig natin. V, everybody's talking about V, but parang medyo foolish naman to assume na V lahat mangyayari. So this scenario, what is this scenario, Joe?
sure. So again, the scenarios are in letters, and those are just 3 actually. The U-shaped scenario is there's a U-shaped scenario, there's a V-shaped scenario, and there's an L-shaped scenario. Okay. And the shape pertains to the shape of the economic recovery. So I just want to make that clear. That's not the market recovery. Okay. It's the economic recovery. Sometimes the market recovery could be a little bit different, but ultimately, we think the shape of the recovery matters. On the rightmost part, you have the L-shaped scenario. So the L-shaped scenario is kind of like the worst case scenario, okay. In the sense that this assumes more than a 4-month total lockdown. It assumes ineffective execution of government stimulus and inadequate execution of government stimulus. We think actually on the monetary side, we have had pretty proactive measures being implemented. On the fiscal side, though, we think there's a lot of room for more fiscal easing. I think other countries have their fiscal easing is I think closer to 10 or 12% of GDP. Ours can, I think, can be we can have more of that. The L-shaped scenario also assumes basically a recovery in GDP that will probably happen in 2022 onwards.
So you're saying
longer, L for longer, longer recovery.
So what you're saying is that that's the worst case scenario, that we did decline and we're declining. We haven't seen the bottom of this, and recovery is going to drag, assuming that the lockdown is longer. And many things are happening today. One of the surprises from the last time interviews, we did not expect that the lockdown will be extended. Diba? So in a way, it's pretty much still extended. So the lockdown is going to be a little bit longer. And just to frame up this discussion, what happens to the economy will have a high influence on what's going to happen to the market. Maybe not exact, maybe not coupled, pero that's in a way that's going to affect it, right? Am I reading
Absolutely.
it? Yeah. So L, so that's what we read about. L
is longer recovery of the economy.
Okay,
and it also pertains to the shape of the economy.
And we've experienced that in the past. We've experienced that, no? We've had a long recovery. Nahalata mga edad natin. Ano to? Mga 80s, di ba? So this is the story. It took a while for that to happen. That's the first one. Okay.
So let's look at the conditions first, and then let's talk about the numbers for each scenario, diba? So the V-shaped scenario could be considered the best case scenario. A V-shaped scenario assumes infection rates peak within the next 2 weeks. You only have a 2-month total lockdown, which is still possible, and there is a partial return to work and effective execution of government stimulus and increased fiscal stimulus and a vaccine. And I only mentioned the vaccine because of the implications on consumption rebounding sharply, and then under that scenario, the upside on the market is higher, but that's the lowest probability scenario in my view right now.
Just to L is the worst case scenario, V is the best case scenario.
V is the best.
The best case scenario.
The V is the sharp recovery.
Yeah, and
V recovers.
Yeah, but
as early as third quarter 2020, which is, I think.
But our governor has declared that it's going to be a V. But of course, as to how we believe it, that's another story. Because it's going to be a V recovery. But following certain scenarios.
Who's saying that? Sorry, who's saying that, Random?
Si Benjamin Dokdiokno. He's back. Of course, he needs to rally people. No? So he's saying it's going to be a V recovery. So we'll see. But pero tama.
I think the V is still possible. I'm not sure if I put it there on the slide, but the V is possible, especially if fiscal stimulus is increased. I think then you reduce the probability of increased bankruptcies and micro SMEs defaulting on loans. You reduce the possibility of this event devolving into a full-blown liquidity and financial crisis. You reduce that possibility if you add fiscal spend and you go through this V-shaped recovery. So, we think that's less likely than the L, but we think the most likely scenario is the U-shaped economic recovery scenario, wherein GDP under this base case scenario recovers as early as either the fourth quarter of 2020 or the first half of 2021. So
you're saying the U is more probable versus the L and the V.
Yes.
And I tend to agree with you. No, it's really more realistic. And that's it. Because I understand you say the fiscal issues, but those things, this easier said than done. I mean, number one, it's unprecedented. And do we have the capacity for fiscal easing? Do we have the resource? Do we have the money for that? Yan yung question. No? Now also, I'm also in that side of the business people. Teka, kailangan natin ng tax holiday, kailangan natin ng tax break, but at the same time, kailangan natin ng fiscal. So, that means we're going to borrow again, so deficit. So, I wish I paid more attention to economics 101. But pero that's going to be the problem. So I tend to echo your again, guys, for those watching, we are not the experts here. This is our work, this is what we do, but at the end of the day, it's just everybody's good guess is good as bad. But the V is best case scenario. It doesn't hurt to hope, but we want to prepare for the U, and that's number one. We understand. I think that we're gonna grow, but just a matter of when, and that's gonna happen. So you're saying is more for those watching. Pag sinabi mo L, bumagsak economy, magpa-flat yan na mataga bago makyat. Kaya L. Yung B, pag bagsak, mabilis siya mag-recover. Can you say that 2009 was a V? Was it a V? It was a V, right?
2009 was that was a relative.
That was a V. So may presidents naman tayo. But again, it's a different situation. But now, more realistically, we are now saying it's going to be more of a U. Correct?
Yeah. I think 2009 was, if you recall, that was the start of one of the longest bull markets.
Oh, man. Not just the bull market, it's a golden decade of economic growth as well. Diba? Doon yumaman si Jun Tarrobago, by the way. So, neither confirm nor deny. Okay. So, but basically, it was one of our best because again, it was also coupled by fantastic golden decade of economic growth. We broke our generational average, and and that's why we haven't stopped growing until last quarter. Okay, so this is very important. You mentioned something here, Juno. There are decades where nothing happens and weeks where decades happen. What does this mean?
That's a quote from one of the leaders of Russia, I think, and it just pertains to the velocity of change in the markets this year. And if we look at the S&P 500 in the US, for example, the S&P 500 went from its high this year to bear market territory in only 16 days. And yeah, the closest I think market drop in terms of velocity was during the Great Depression, 1929, and during well, you all know what happened in the late 80s, which were more than double the time we took to go from the S&P 500 to go from the peak this year to bear market territory. So 16 days versus I think the next fastest bear markets were during the Great Depression, 1929, and then in 1986.
So
sequence of events is similar.
Yeah. So this is in a way, this is a record for us, no? I mean, in living times, no? June, where is 2008 here? It's not there. 08, 09. Sorry.
From what I do remember, I think it was October of 09 or 08.
Yeah.
It was down 30 or 35% in 1 month.
Okay.
So still longer than what happened just this year.
Okay. So this is really unprecedented times. All right. Again, just to look at the slides, and that information is very good, no? In your according to the IMF outlook, so 2020 it's a giveaway, diba? Everything is going to be negative except for China, but at 1%, well, that's nothing, no. But 2021 a spectacular growth, no. So you see China at 9.2, the Philippines at 7.6, and the world at 4.8. Do you agree that this is going to happen?
Yeah, under a U-shaped scenario, this is possible, but I'm not sure how updated these numbers are, though.
Okay.
Only if speaking for in terms of the forecasts for the Philippines. I mean, the forecasts went from. I think this was at the start of April. This was released by the IMF at the start of April, and obviously there was less information then than there is now. A lot of downgrades have been we've seen a lot of downgrades in terms of economic forecasts since then. We, for example, went from flattish growth this year to negative growth this year, and I think a lot of other houses, both and global financial institutions are likewise downgrading 2020 expectations, and I think that.
Okay. Sige. That's good.
Limitations, human movement and consumption and trade.
Right. All right. So that's gonna happen. So very good. Okay. Move on to the next slide. Okay, tayo, June?
Sure.
And by the way, thank you. These are all from ATRAM. Very good numbers. Okay. We did a little bit of discussion about this the last time, but it's good to be able to again be updated with what's going on. Where we were in 2009. 2009 was a few months after what happened in the great financial crisis of 2008. But again, in the last discussion, we said we are in a better position to recover. So again, you want to continue this slide, June?
Yeah, I guess what's worth noting here is that the dollar reserves of the Philippines are actually quite strong still. Actually double compared to 2009, and most importantly are higher than the external debt of the country. It used to be that the debt was bigger than the Philippines dollar reserve, so that was a big shift, improvement, and of course the credit rating of BBB plus compared to the BB minus. So now we're actually one notch below S&P A credit rating, and everyone knows about GDP per capita, which is people anticipate a boom in consumption and all that, and the healthy debt position relative to GDP. So I guess the point here is the economy is not broken, even if there are pockets or areas wherein this event will have some permanence in terms of impact on the economy. We don't think it will be severe enough to reverse what we have in terms of financial health, the Philippine economy's financial health.
Thank you, Jun. Ganda ng sinabi mo, no? You said this shows that the economy is not broken. Now, this scenario is very different in the 80s when we were kids. No? Very different. The economy was broken. That's why recovery was longer. If you see that, even in the 90s, no, after the Asian financial crisis, it took us a longer time to recover because we are in a major bad shape, but we are in a better shape today. So what we're saying is, in terms of these numbers that Jun has showed, there's a high probability that we can recover better than where we did before. Saying that's what those numbers represent now. Okay? Even our external debt to GDP is actually way better. Pero moving forward, aren't we going to borrow more money after this? Are we going to borrow more money after?
Yeah, that's a possibility because from my conversations with or calls we were in with government, I think the idea is the infrastructure spending program is also a way out of this through job creation and stimulation of the economy. So I wouldn't be surprised if the government borrowed a bit more. But our position is right now, one could argue, close to optimal.
Yeah. So Jun, but also showing with these numbers, it means that we can accommodate to borrow more, correct? Because other countries have even worse. I mean, we can. I mean, our position today is we can actually accommodate to borrow more. No? So maybe not in the 1970s area, but I think that is something.
Yeah.
All right. So
yeah, I guess the financial condition, the gearing levels, and the financial condition is not fragile. It's actually quite strong. So that puts us that gives us some flexibility, I would think.
So I guess that's why we're saying that this is not the end of the road, as they say, because we are not economically broken, correct? So we're saying, yes. So very good, very good. Thank you for this one.
Welcome.
Yeah, ayan na pala, yung external debt to GDP natin. If you can see the slides, guys, no, you see how it has gone down, no, from 08, and it's now at this is 22.8. Again, limited knowledge ko. That is really a very good external debt to GDP number, correct? I mean, compared to other countries.
Okay. So that's the government. If you look at gearing levels for the companies in the country, at least those in the major companies in the stock market, the average gearing levels are if I remember correctly, closer to 40 or 50%, and or lower even, and that's I think also close to optimal. I mean,
yeah. All right. So a lot of the companies, the government and the companies that we invest in, they're pretty good in managing their debt. So that's a story. If you're not good in managing your debt, you are more susceptible to a lot of risk, like what's happening today. Is that what we're trying to say?
Yes.
Okay. Absolutely. Very good. Very good. Para kung nag-aaral po kayo ng economics from Professor Jun Tarrobago. So sabi ko, we should have spent more time studying Economics 101 instead of, thinking of something else. I'm moving to the next slide, Jun.
Yes, sure.
Okay, so the next slide, your third slide. Ayan na. The shape of the recovery matters. Okay.
Earlier, yes. Yes, Randall, sorry.
Powerful. I mean, seeing all of these things. Okay, can you talk about now, Jun, can you now? You said do the DDL, all right? This is the discussion that we had earlier.
Yes.
Okay, so this is gonna happen. You versus a V versus an L. The U is what
Yes.
we are expecting to happen. At least
Yes.
from a fund manager perspective, you are more, the scenarios are there, but what are you preparing for? The V, the U, or the L? Or are you preparing for all the scenarios?
We so again the data, it's all, the reason behind these scenarios is that, um, so we can relate the data as the data is delivered, the economic data, sector data, earnings data of the companies. Uh, so the data that's coming out right now supports a U-shaped scenario,
Okay, okay.
which is essentially a 2 months of full lockdown. Um, and this translates to, uh, at least under this scenario, a 15% decline in earnings for corporate earnings for 2020. Uh, Here we were looking at a 0.6% GDP growth under this scenario, but that's probably that. Like I said earlier, we've since shifted to
Yeah.
uh, expectations of negative economic growth for 2020. Um, so this needs a bit of revision.
Okay. Given.
So the GDP growth number is negative, not 0.6%. The EPS growth number of minus 15% also needs to, most likely will be adjusted downward to probably 20, at least 20, minus 20%, or toward minus 20%. Only because I think as of yesterday or the day before, the corporate earnings that were coming out, I think 70% of, around 72% of the members of the PSEI reported first quarter earnings as of yesterday or the day before. Of the 72% of the PSEI that supported earnings, the core earnings decline for the first quarter was around 14% already. So if first quarter earnings is trending minus 14%, well, obviously the second quarter will be worse than the first quarter. Diba? So that means this minus 15% will likely be downgraded, maybe toward 20%.
June, what does EPSG, just for the interest of the viewers? What
Oh,
does
that's earnings per share growth. So that's basically a measure of uh, earnings per share in the market, or corporate earnings in general for the market. So, and we presented that because corporate earnings is one of the, I mean, over history, is one of the strongest drivers of share price movements.
basically, if the company
Stock
is doing
markets.
well, it's gonna go up. If the company's up earning, it's gonna correct. I mean, pretty obvious, right?
Yes.
So
Yes.
this is the numbers that you're seeing. So we're now just recast a little bit to negative 20%. Okay, that's a
Right.
scenario. And dito
Yes.
malalaman natin, guys, companies that have a very, very good financial management, have enough assets and money that they can wade this volatility. Other companies that don't have enough fiscal strength will now be challenged, and you will see that. Do you see that the composition of the index? Do you see it changing towards the end of the year? With all the earnings coming in?
Yeah.
Mangyayari yan, no?
That's possible. I mean,
Possible.
yeah, if there are changes in the free float,
Yeah.
that's possible.
Okay.
Yeah. So based on this base case scenario, assuming earnings drops by about 20%,
Okay.
and we're assuming a modest recovery next year in earnings. Actually, I think if you look at if earnings grow versus 2019, you're looking at bigger earnings rebound for 2021. But that said, at about 14 times PE, the market, which we think would be a fair multiple or level for the market, based on 2021 PE, we're looking at about 7,100 for 2021 as an index target. And this base case scenario, we've actually ascribed a 70% probability.
Okay.
Only to illustrate how much the data right now supports this scenario occurring versus the best and the worst case scenarios. So we've assigned a 20% probability to the L-shape or the worst case. Yeah, and like I said earlier, the least likely at this point is the V-shaped scenario, which is the best case, about 10% probability. That probability goes up, I think, if there is a significant rebound in or increase in fiscal easing.
Or maybe next week, may vaccine, that's going to change the whole story, right? That's one of the things. But again, I'd like to agree. Probability, we're dealing with probability here. 70% it's going to be a U. It doesn't hurt to hope for a V. But I'd like to believe that's unlikely to happen. And the good news is, at least it's a U, not an L. So U and L. So you guys, this is the things that you understand. So very good, no? This is very.
So Randall, I just want, if I may add lang. So the relevance of this for you, for the investment, if there is data that comes out that does not support the assumptions for the U-shaped scenario, if it's worse data, that means there could be a 4-month lockdown or more, then we shift to the L-shaped scenario. So the targets change.
Right.
If we get improvements in the situation, whatever that may be, very, very soon, and there's a significant boost in fiscal spending, then we're looking at the V-shaped scenario becoming more relevant. So the probabilities go up. So now, you can adjust your strategy accordingly.
Okay. So, but now with the data that we have, it's really more you. And here you're saying that, no? With what
I think so. Yeah, and ultimately it results to, I guess the end here is looking at 12 to 18 months down the road. The U-shaped scenario implies about 7,100 index level. That's about 28-30% upside. Okay. The best case implies exponentially higher. I think higher upside at about 73.96, which again we've so far based on the data we've ascribed only a 10% probability. And then the worst case implies the market goes back to the intraday low, close to the intraday low this year, which was 3,960. If you recall, during the early days of the indiscriminate and panic selling, the market actually dropped towards 4,000. And in hindsight, that kind of made sense in terms of people were probably or unconsciously pricing in the worst case scenario.
Okay. And of course, the good news is we didn't stay very long in that numbers, no. So this is now more for application for us, investors. These things are very important. But Jun, I'll give you 2 scenarios. No? I have been investing for quite some time, assuming I'm doing cost averaging, and even if I did cost averaging in the last 3 years, my values, my UITF or my VUL or my mutual fund has gone down at the same scenario. And the U-shape, assuming it's going to be a U-shape, what should I do? Should I cut loss already? Should I wait? What would be a sound recommendation for investors at this point? Assuming in a U-shape. V-shape, clear na yan. Okay, just nakakit ka agad. Pero U-shape, what would be your recommendations to them?
Under a U-shaped recovery scenario, which again is the most likely scenario based on the data right now, the prudent move for investors is to, well, number one, have a long-term investment horizon. Number two, it's to be selective in terms of participating in the market. And what I mean by selective is selective in terms of the funds or the securities you invest in, because under this scenario and given the fluidity of the situation, not all index stocks will be created equal.
Okay.
Because meaning I guess I'm pertaining to passive active management. Okay. While passive management has gained a lot of popularity, and I can understand why, under this particular scenario, a passive strategy would mean that the investor would be exposed in a significant way to companies that would be the worst hit companies.
Okay. Can you expound a
They're
bit?
probably sectors that would have long-term implications, or that will bear long-term damage from what is happening under a passive strategy. Of course, you'll still be exposed to the other good companies, but I think the most prudent strategy right now, and I'm not saying I'm saying is I think the strategy that makes most sense is to really look at the stocks, and really trying to identify where is the value. I mean, we have shifted from more of a growth oriented approach to investing, into more of a value based investing. So what we basically did was, we stress tested the earnings, the cash flow projections, and hence we came up with stress-tested intrinsic value projections of the companies in the PSEI and in our investment universe, and we determined that the most prudent thing to do was to really invest in these quality names that, despite the stress-tested numbers, I'm still getting good value at these levels. So rather than hope that some particular sector or company does well and recovers well under these conditions, of course there's still very good names there. We figured we focus on the companies and sectors wherein we have more visibility in terms of them rebounding and emerging stronger after this.
So, Jun, what you're saying is, in the situation that we have right now, you're saying that actively managed funds is a better venue rather than passive like index. Okay, I just get in the index. So you're saying active managed funds will, in a way, after this recovery happened, will outperform the passive funds like the index. Is that what you're trying to say?
What we're saying, active will be more pronounced and will be very effective long term under a style leaning more into active management and value investing would probably be very effective under current conditions and given a long term investment horizon, because that would allow the investor to invest in companies that would emerge stronger, quality companies that would emerge stronger, whether it's earnings, whatever measure, and companies that present deep value propositions. So we think that's the strategy for the next 12, 18, 36, 48 months.
Jun, this is going to be a curveball for you. You manage a lot of the funds of ATRAM and everything. Which among your funds will be most closer to what you're trying to advocate now? Which of them? Can you identify most of your funds, or which? There's a lot of funds in ATRAM's offering right now. Of course, we know that the index is the passive, but which among? I mean, you have a famous alpha opportunity. Which one would best describe the strategy that you're saying now, the passive, the active rather?
Yes. So in terms of quality blue chips, it's definitely the ATRAM Philippine Equity Opportunity Fund that we're really positioning for the next 12 to 18, 36, 48 months. So over the medium to long term, I'm very confident this strategy will be effective. Supplement that with a strategy that invests in high quality small and mid cap companies that have proven resilient also, at least a handful of them.
Okay. Parang you're saying is
alpha. That's the Alpha Opportunity Fund.
Okay. So if I have, let's say, I have 100,000 pesos, it kind of is wise for me to put 50,000 in, let's say, Alpha Opportunity, and maybe 50,000 in a more high quality blue chip type of a fund. Is that a sound strategy? And assuming that
Yes.
5-year horizon, 10-year horizon, even that.
I think over a very long term horizon, that's a sound strategy because not only will you be investing in the blue chips that are proving to be real blue chips under these conditions, you're also investing in the future blue chips via. So you're investing in the blue chips through quality blue chips and value blue chips through ATRAM Equity Opportunity Fund. You're also investing in the future blue chips, which is where quality future blue chips with good growth, good long-term growth prospects through the Alpha Opportunity Fund of ATRAM.
Para tayo may endorsement na. Equity opportunity and alpha opportunity. I mean, you can't go wrong with that kind of a strategy, correct? I mean, assuming that you have a 5-year, 10-year horizon, or even longer. If you're preparing for retirement, then these things will go well. Because I understand after all of these things, you will see a new set of blue chips. Am I correct? Am I correct in assuming that? Some will go, some will come in. And that's going to happen, right? Maybe if we do a video next year, we're talking about new sets of blue chips coming out from all of this pandemic, correct?
I'm pretty sure that's gonna happen.
Yeah, that's scenario. Okay, wow.
Long term.
Yes, very good. No, this is very, very helpful, Jun. I'm again for transparency. I'm an investor in ATRAM and also Soldivo, one of the funds that they are managing, and it gives me confidence that despite of what's going on, all I have to do is go back to our fundamentals, go back to our investment objectives, and it seems to me the only thing we can do at this point in time is to wait. Diba? And tama ba yun? If I have money today and I'm not going to use that money, might as well put a little bit in these things and see my money grow in the future. Is that a sound? If I have to say that, I'm not out of line, right? I'm saying that that's a good idea, correct?
Yeah. Yes, Randall. I think one thing worth understanding is that this entire situation is going to result to massive disruption of industries, sectors, and companies within those sectors. Under this disruption, there will be opportunities for tweaking and shifting business models. And I think the companies we're investing in are at least a lot of our conversations are geared towards that, and we'll have those. Actually, ipo-plug ko na, Randall. We're gonna have those that type of conversation in we have a webcast with the CFO of Ayala Corporation.
Ayala Corp, no? Yeah.
On Thursday, this Thursday. And essentially, the theme is massive disruption will result to opportunities in terms of companies being able to tweak their business models and find opportunities there. There will be new subsectors that will be formed. There will be tweaks to the models, and there will be. I'm pretty confident, excited. A lot of sectors which will present opportunities. Logistics, for example, is one. If this entire thing hastens the advent of e-commerce, then obviously logistics is something to take note of, and yeah, a couple of other ideas there. So
yeah, very good. So we're gonna have that. We're gonna put your links there. We hope you guys gonna pick up. Yeah, or you can go to ATRAM's website. They're gonna show all of these things. Ito lang take down ko rito. I mean, sa dami na diniscuss natin, Jun, and even you should have seen heard our offline. Mas offline namin. Some of them we get post. But, these things are very good, no? Ako, isa lang confident take out ko dito. Sulit na sulit yung management fee na binabayad ng investor sa inyo because the kind of research you guys do is really goes beyond all of these things. And sometimes, when a lot of people, we have this discussion, parang, ang taas ng rate, but the kind of work that being done to do these things, dito mo malalaman fund managers who are doing really a good job in managing these things, that you're seeing that this really, the money that you pay them is really worth every peso that has been deducted.
Thank you, Randall. Thank you for the kind words. It's because we enjoy what we do. So we have fun,
doing
analyzing and creating value for clients, investors.
Sige, Jun, last words mo for all our viewers. Our last YouTube was well received. So again, I hope that this one's gonna even mas magaling ngayon. So any last words for our investors or future investors?
Yes, keep safe. Please keep safe and please sign up for our webcast on Thursday with TG Calco of Ayala Corp. Talk about embracing change is the title of our webcast.
And that's the thing that we need to decide to begin embracing change. All right. So with that, I present to you one of my dear friends and somebody that I run to, Mr. Pili ko after nitong video, parang gusto ko mag-invest na naman bukas. No?
Randall.
Oh, okay. I know that this is not your tagline, but it's in good hands. Okay, but this is something, and I'm going to put the links of ATRAM website. You can do that. They have a very active Facebook page. They do a lot of webinars. Sarap pag investor ka nila, no? You get into access in all these webinars. You see all of these things. But really excited, don't forget to invite me to that webinar of yours with TG because we wanna be able to cover that. ATRAM.
Sure. The links are on our Instagram.
Okay, so all of this is gonna be with that. So with that, thank you very much, Mr. Jun Tarrobago, the head of equities of ATRAM. If you're new, this is the first time you're watching it, please subscribe to this channel, subscribe to ATRAM's channel, and do check them out. It doesn't hurt to check them out. That's the only thing I'm asking you guys. Check them out. Let's see if this might be into your liking. With that, thank you very much, dear friend.
Thanks for having me, Randall.
Let's do one more video again. Sana hindi Ella. That's the thing that I don't want to happen.